Hello everyone, welcome back to the channel. Guys, in this video I'm going to explain to you a very simple, very simple but very effective option trading strategy that you can even sometimes 10x your cost, okay? When I mean cost, it is what you're going to pay to open the trade. And of course, the strategy that I'm talking about, it is the iron butterfly, okay? It is a risk-defined strategy. Why? Because we're only going to lose this tail here of this curve, and this might be $1, 50 cents, 30 cents, and so on. But our risk for these trades will be always capped for whatever debit, okay, we pay to open this trade, okay? One thing as well that you guys need to pay attention, it is the payoff diagram. The payoff diagram of this strategy, like I show you guys, it is something like this, okay? So what we want to do is we want to use a security or any product that doesn't trade very crazy, like Nvidia or Meta or GMC, AMC, none of this kind of thing. We need to trade something, guys, like this. They pretty much trade sideways, something like the IWM or maybe the EWZ. These are ETFs, but you guys can pick any stock you might like. But when it comes to stocks that can have great volatility on a short-term expiration, this is not the strategy that we want to use on those products. We want to use this strategy on those products that's going to trade sideways, okay? And whatever process you might have in terms of technical analysis, fundamentals, whatever it might be, we need the stock to trade sideways, at least for the time being of our option strategy. So jump here to my TastyWorks platform. The first thing we're gonna do, we're gonna get something, let's say between 7 to 10 days. This will be our DTE, in other words, our days to expiration. This is when our option is going to expire. So the first thing we're gonna do is, let's pick here, for example, the 7 DTE. As you guys can see, I'm using the IWM, which is the same ETF that I just showed you on TradingView. So what we're gonna do is, the first thing first, we're gonna check how much IWM is trading for. It is trading at $221.08. We're gonna come here on our strike price, and we're gonna find a strike price that is trading at the money. In other words, very close to whatever price the product's trading right now. In this case, it will be 221. That's the closest one from 221.08. What we're gonna do is we're gonna sell here. Remember, we sell at the bid, we buy the ask. But of course, in this channel, we always open our orders at the mid price. Anyway, so we're gonna sell here the 221, and we're gonna buy 2 strikes below. In this case, we are going to buy the 219, and we're gonna buy 2 strikes above the 223. Okay, we sold one here, we're gonna buy this one, and we're gonna buy this one. We're gonna buy here the 219, and we're gonna buy here the 223. As you guys can see here, we have 1 strike difference between the one that we sold and those ones that we bought. But we're gonna click here on the one that we sold, and we're gonna sell twice. Okay, so basically we are selling 2 at the money, and we're gonna selling 1 each side out of the money. 1 out of the money below the current stock price, and 1 out of the money above the current stock price. Now, if we go to the curve, as you guys can see, it's exactly like I drew to you guys before. We have here our zero line, okay, and our maximum loss, it's capped by this tail on this curve. In this case here, is going to be the maximum we're going to pay to open this trade, which it is 29 cents. Of course, remember, from our option trading course, which you guys can learn this channel from 0 to here for free, by the way, we have to always multiply that by 100. So in this case, our maximum loss is going to be $29, but our maximum profit is going to be $171. So in this case here, we can pretty much here, guys, 6x our money from the cost that we pay. This strategy have a very low win rate, as you guys can see, but I'll be always mention to you guys one thing. In this channel, we pretty much do 95%, okay, option selling, and 5% option buying. There's place for everything, but of course, when it comes trading option, we are very skewed to the sell side. But this strategy here, if you have a smaller trading account, it is really good. But of course, remember guys, it's like this. You toss in a coin, you can have a tail, 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 tail. How many? 1, 2, 3, 4, 5, 6, 7. Then you can have head, head, and head. You don't know what's the streak here you're gonna have in terms of loss. That's what this strategy is about. Because when you do the back test, in the long run, this is pretty much what people use as a 0 DTE. What they do is, okay, it's very simple. On a 0 DTE, people do this, okay? They do a iron butterfly to the put side and an iron butterfly to the call side. In the long run, you're gonna have those many streak of loss. Then eventually you get here 10x, you get 7x, you get 5x, you get 6x. In the long run, you have these guys. Okay, this is the curve you should have for the iron butterfly, because those little loss is pretty much going to accumulate over time. You can have 7, 6, 5, but in the long run, when then bang, you go to 10x, you go to 20x, you go to 7x. Depend how much you're going to set up this strategy. But you guys can see here on the peak here, this is when we're gonna get our maximal game of this strategy, and then we make money, we break even, then we start to lose money. We make money, we break even, we start to lose a little bit, and then we lose the maximal here on the tail of this bell curve. Okay, not actually a really bell curve, a normal distribution, but it is a similar to a bell curve. Okay, and of course this strategy, the cost of 29 cents, like I said, is going to be the maximal loss. Why? Because we are buying to open. Every time you buy to open an option strategy, that be always going to be your maximal loss. And of course, when you sell to open on a single strategy like the naked put, cash secure put, the premium that we're going to collect is always going to be our maximal gains. Okay, but this strategy, very, very simple concept. We want to stick to those products, ETFs, stocks, commodities, whatever product you might like. But we need to make sure, guys, that whatever analysis that we might have or we might have done can tell us, or at least direct us to a product that's going to trade sideways until our option to expire. In this case here, it is 7 days. So if you go back here, for example, okay, and then if IWM trades, let's say, for example, a little bit down, maybe recover a little bit, go up, start to recover on the way up, and then comes back here. If you stay here inside, okay, this range here, we will make money. Very, very simple, okay? And of course, if you pretty much pin at this level here, which it is our short strike price, this is when you're gonna achieve our maximal games. But of course, there's plenty of things you can do in terms of trade management, which I will post in this channel, how you're going to manage this trade. And also I'm going to provide you guys a trading journal, which you're going to put your long call to the downside, long call to the upside, and your short calls in the middle. I'm gonna do for both call and put, because you can do a put iron butterfly. You can also do a put call iron butterfly as well. Like in this case here, this is the call side, but you can do the put side as well. Okay, I will provide you guys the trading journal so you can log in all your trades and you can see what's going on. And you can quantify and qualify your trades to see what's happened to your strategy, okay? But in a nutshell, this is a very, very simple strategy. A lot of people talk about this on YouTube, but I'm going to provide you guys in the next video how you're going to manage this trade here, because that's the main thing, how to manage. And the worst thing ever, which nobody's talking about, guys, how are you going to close this trade? Because don't forget, if IWM, let's say you open your trade by 9 a.m., okay? And IWM is trading at this level here, you might not have captured yet the whole amount, because the curve might be only like this. And then you go, I'm talking about that trade that's pinned, okay? The IWM is trading at 221, and then 11 o'clock go like that, and then 1 o'clock go like this. What are you gonna do? Are you gonna cash it off $100 here, $70 here, okay? Or maybe $125 here, or you're gonna wait the whole day for this curve to pretty much match this triangle shape here, where you're going to maximize $171. There's plenty of things you guys need to learn when it comes to trade management. This is just how to set up this strategy, but I will provide you guys the trade management. It's the main thing when it comes to trading options. It is how to deal with your trades, okay, to the good sides and to the bad side as well, because taking profits is as hard as it is putting stop loss or closing the trade or rolling the trade or managing your trade. Okay, it is very hard as well. And in this case here of the iron butterfly, you need to know the time of the day, what you're going to do to make sure you capture as much as you can from this number. Because remember, you're losing 29 cents here. You lose once, twice, 3, 4, 5, 6 times. If you capture the whole thing here at once, you are a break even. So this trade here, guys, it is, okay, actually let me come in. This trade here, it is a 1 to 6 or 6 to 1, whatever you want to call it, okay? You pretty much win. When you win 6x. When you lose 1x. So you have to lose 6 times to match your winners. So you guys can have an idea. It's an amazing risk to reward, but you need to know exactly when to close the trade, which I will provide in the next videos, okay? But in a nutshell, it is what we do. We sell here one at the money, and then we sell another one. In other words, we sell 2 options at the money. You can use for the put side as well, and we buy 2 out of the money. In this case here, you'll be buying here this strike price for the put, and you'll be selling these 2 here, or you'll be buying these 2 here on the put side. If you want to make the put iron butterfly, very, very simple. In a nutshell, it is a good strategy, especially for those of you that have a small trading account. Okay, guys, thank you very much. Leave your comments below. Let me know what you want to see next. And like I always say to you guys, if you want to support the channel, the best thing to do is subscribe to the channel, leave your comments below, and smash the like button. All the best, stay safe, and happy investing.